didn't know about it back then. And when people ask me,
I'm 85 years old, for God's sakes. I get
what I'm saying is, when people ask me today, what is the biggest surprise in this in crypto world, um, for us in the last 10 years, it is stablecoins.
Yes.
We didn't back then. We were not talking. I know you existed, or Tether existed, Paolo, but we weren't talking about it back then, and I didn't know about it back then. Right. So.
Hey guys, welcome to Everyday Finance. We're stepping into conditions that once ignited the fastest price surge in modern history, and the same upheaval that followed could return. That's Ark Invest CEO Cathie Wood's warning. She sees today's market as echoing 1995, right before the internet transformed the economy. That era of innovation sparked a powerful growth wave fueled by technology, optimism, and capital, ending in volatility, but permanently reshaping global commerce. Now Wood argues the setup is even stronger. With inflation easing, financial conditions stabilizing, productivity ready to climb, she expects the next 5 years to be more transformative. Breakthroughs in AI, robotics, nuclear energy, blockchain, and crypto, combined with deregulation, could push real GDP growth above forecasts and gradually shrink the U.S. deficit, just as growth in the 80s, 90s turned deficits into surpluses. Stick around to the end of the video. Where Wood links this vision of innovation and growth directly to Bitcoin's long-term potential?
Well, I think that we have just an incredible opportunity with Dr. Laffer, who is a monetary scholar. His mentor was Robert Mundell, who won the Nobel Prize for monetary theory. And Art also was in the Nixon administration. He was not advocating for this at all. And in fact, he's been trying to figure out an answer to it since then. But he was there when the US closed the gold window in 1971. And when we did our first white paper on Bitcoin in 2015, we collaborated with Art Laffer. And at that moment in time, he said, after he read the paper, he said, "This is what I have been waiting for since 1971, when we closed the gold window." And I remember saying, and I've said it on this podcast before, I was saying, wow, that sounds like a big idea. How big could this be? And Art said, well, how big is the US monetary base? Back then it was 4.5 trillion. Now it's about 7 trillion. So that's how we started with Art. And now we're into the second phase of this. Stablecoins and regulatory clarity and legislative clarity evolving here in the US and around the world. And Art and I are talking about stablecoins. And he said, wait a minute. This is private money. We're going back to private money. This is so exciting. He was already excited about Bitcoin, which is, obviously the new global monetary system. But stablecoins being an on-ramp into DeFi, decentralized financial services, and private monies, essentially, it got him going again. And so we wanted to do this podcast, and just very grateful that Paolo has agreed to do it. I had the privilege of visiting Paolo and Giancarlo in Lugano not so long ago. And I said to them, I described Dr. Laffer's excitement about this new world, Tether and so USDT and USDC. And he wanted to learn more about it. And so I thought, okay, let's all learn more about it, because Dr. Laffer is going to be asking some very important questions, and we may not have all the answers, but Paolo, you're going to have more of them than we are. So maybe we can start with Paolo, you describing USDT and what it is. There are many people who are just learning about this new world, especially this is called Bitcoin Brainstorm. And so many of the people who have tuned in over the years are very Bitcoin centric. And here we have Tether, USDT, and USDC really evolving and helping the DeFi ecosystem, which is primarily on Ethereum. So maybe we can start there. And then I'd love to have Dr. Laffer ask you questions and probe this new monetary system.
First place, can we do the acronyms, USDT and USDC? What?
USDT is Tether and USDC is Circle. So these are the stable coins. And I just wanted to also, I know Lorenzo has been on this podcast before. Lorenzo heads up our digital asset strategy.
The U.S. budget deficit has become a major flashpoint, with many investors warning that soaring federal debt could strangle growth. Yet recent adjustments have brought some relief, pulling the deficit closer to 4.7% of GDP through tariffs and fiscal measures. Still, Cathie Wood stresses that the real lever is growth itself. History shows that in the 1980s and 1990s, stronger than expected GDP expansion naturally shrank deficits, a pattern she believes could repeat. Today, rapid innovation is driving that expansion. Productivity gains powered by breakthroughs and deregulation stand out as the most effective path to restoring fiscal balance. Instead of stagnation, what envisions acceleration ahead. But growth brings its own tensions, which is why her focus turns next to the labor market, the shifts in unemployment, job creation, and the structural transformation already unfolding through AI.
So Art, that's the start of what's becoming a very big story. And I know, as I mentioned, when I started speaking with you about stablecoins, you likened this to another point in history. So maybe you can give us a history lesson, Dr. Laffer. So Art, Dr. Laffer, I'm sorry, I'm toggling between those two. Anyway, so Paolo, you're now with the Genius Act. You have stated that you will enter into the U.S. In other words, so maybe we can talk. So this is the second part of your question, Art, right? Okay, we're moving into the developed world, and then so we'll talk about that, and then beyond that, this brings us to a question. And this was the debate we were having the last time we talked, Dr. Laffer. Debate, or it wasn't even that. It was just trying to get our arms around a more competitive dynamic would cause. And it also is bringing us to the question, our banking system here is a fractional reserve system, right? And as dollars leave the banking system and move into stablecoins, they move out of the banking system. And does this impact the velocity of money in the U.S.? What is the economic impact of a migration towards stablecoins? And the second part of the question is, will the competition that you just described move the stablecoin world towards something more like a fractional reserve system? Because, again, Art is coming at this from his monetary expertise. And, certainly Bitcoin in the early days when Dr. Laffer blessed, sort of the concept, it was a huge confidence booster for us. So
what was it selling for back then when we did that, Cathie, in $250?
$250.
Yes.
That was a good time.
It hasn't gone up much, has it now?
So it was a big idea. And I think, stablecoins are big ideas as they evolve in the way you suggest. But in terms of that, and Art, I just want to get back to question that you asked before about competition, forcing you into a fractional reserve system, just competition, but other companies being willing to do it. We didn't know about it back then. And when people ask me,
I'm 85 years old, for God's sakes. I can't.
What I'm saying is, when people ask me today, what is the biggest surprise in this in crypto world for us in the last 10 years? It is stablecoins.
Yeah.
We didn't back then. We were not talking. I know you existed, or Tether existed, Paolo, but we weren't talking about it back then, and I didn't know about it back then. Right. So,
unemployment is steady at 4.3%, but job growth has weakened, with past gains revised lower, some even turning negative. Work weeks are shrinking. Manufacturing remains soft. And now high-value sectors like tech and finance are feeling the strain. For many, that looks like a warning. Cathie would see something else: structural change. She points to automation and AI reshaping the workforce. Blockchain, eliminating inefficiencies, and government layoffs cutting spending. Painful in the short run, yes. But she argues, these shifts lay the groundwork for lasting productivity. With inflation cooling, yields stabilizing, and credit markets showing little stress, innovation becomes the central driver once again. Just as the internet boom of the 1990s created trillion-dollar giants, Wood believes AI and blockchain could unlock even greater gains. For Bitcoin investors, that backdrop is especially bullish. The next 5 years, she argues, could propel prices far beyond today's levels, raising the question: will Bitcoin become the foundation of global finance? Or will another force take its place?